Hi to everyone. Welcome to the 15th episode of FinTech for Everyone by iCrypex Financial Technologies Master's Program. Hi, Burak. First of all, welcome again. How are you?
Hi,
How is
Erdamar.
everything?
Good, everything is great. How are you?
Fine, thanks a lot. We are all monitoring the news about the global economies, about cryptocurrency markets since last week. As we have also covered in the previous episode, we are trying to recover from the Terra drama, let's call it like that. Everyone is, I think, traumatized by what has happened recently. Hopefully, the all economies and the markets will recover from these days. Things are not looking good, it seems. And in today's episode, we will try to cover the highlights of the big week, but mainly the recent announcements by Powell. I think they are quite important, and the recovery plans for Terra. So I think we can focus on those. If you wish, let's start with the Powell's announcements, with the general concern. I mean, do you think that a recession risk is out there for global economies, including USA? What's your opinion on that?
Certainly, according to market sentiment and some metrics that market has been following for so many years. As we know, the crypto market is relatively new, but the traditional markets has developed this certain metrics, sentiment data, etc. for so many decades. So they are actually more reliable, so to speak. So the instead of focusing on Powell's yesterday's comments, actually, because he didn't really change the course of what he said before. Last week, also Janet Yellen's comments last week about soft landing, the possibility or how could they manage the soft landing. So the soft landing is basically means that tightening the monetary policy without putting the economy into recession. One might ask, what is recession? So again, in crypto market, it's new and no one agrees on any definition, bull, bear, anything. But in the traditional markets, those definitions are very clear. For example, in order to call a recession, an economy has to shrink 2 quarters consecutively, right? Is the right way to say it? Yeah, consecutively 2 quarters it needs to shrink. And this actually happened in the United States in the first quarter. As we all know, it was a big surprise. So if the US economy shrinks again in the second quarter, this will be a recession on textbook definition, recession obviously. But if this is just a textbook definition, but there's no reality in the market, then the other sentiment data, like Michigan consumer index, I believe I might say it wrong. It's not in front of me. And also, like CNN has a fear and gear index. Everyone knows about the fear and gear index in the crypto market, which Kerem also developed it. But there's also traditional market fear and gear index. CNN has been doing it. So both
Fear
of
and greed. Fear and
greed.
greed.
I always say gear. I'm sorry. Yes. In the
No
last,
problem.
in our last with Kerem too, I always say fear and gear.
So
So okay,
this is the new
fear
metric.
and
This is
greed.
the new metric. So to distinguish it
Yes.
from the fear and greed metric, I think it's okay to
Yes.
call
No,
Kerem's
no.
metric as fear and gear. I think it's plausible.
Fear, fear and greed index. That's right. And so this is like fear and greed index, and the consumer sentiment metrics index has been showing the recession levels, like definitely, especially the CNN's fear and greed index in this level, its lowest reading since March 2020. I don't have to remind anyone what happened in March 2020. So the sentiment is as low as there right now. So on top of that, the energy prices in the States, gas prices, starting of the Russia invasion of Ukraine, it increased, but a couple of weeks after that, it actually went down a little bit. But right now, it's actually higher than that first week of March, first two weeks of March. So that's going to actually reflect the coming CPI prints and other data. So this is, and at the same time, the Fed is like, Powell is like talking about soft landing. So what does Janet Yellen said, actually, Treasury Secretary, about soft landing? She said that Fed would need to be skillful and also lucky. She literally says that there's no way it's not going to be soft landing. If the if the Treasury Secretary tells you that Fed should be lucky and skillful at the same time to avoid recession, that means it's not going to happen. So, and all the other metrics shows us that too. So what does that mean? I believe I was expecting this recession risk and this some sort of like, this crisis in the economy, not in terms of the equity prices, but in terms of growth and other metrics, would come actually next year, maybe the second half of next year, 2023, and then the Fed would probably just like reverse its monetary policy from tightening to expansion that time. But I believe now, I believe I have a high conviction now, not high conviction, but high probability. I believe that it's going to come at the last quarter of this year, after the elections. November election is the first Tuesday of November is the election here, and that will actually like coincide the second fourth quarter of this year. And I believe if nothing changes geopolitically in the economy, if there's no miracle by then, I believe the recession risk will outweigh the inflation risk, and the um, Fed would actually not start monetary expansion, but stop it at least, or decelerate the pace of monetary tightening.
So a couple of comments on that. I think, I mean, I agree with majority of your comments. The luck might refer to maybe the other conditions out of the control of USA economy, like the supply-based inflation, because the only thing that can be controlled through the monetary policy would be in these circumstances through the inflation based on demand. But in these times, due to the energy market conditions, due to the Russia-Ukraine crisis, due to the now close down of China, and now thankfully things are in much better shape there, because they have waited for 3 consecutive days for 0 cases of COVID. Then they have now removed the lockdown of Shanghai, which might be, of course, good news, but with a lag. There are some other bad news are coming out of the China economy, which will affect again the input prices for the economies, which is another pressure through supply-based inflation. If they can be managed, if the inflation seems to be out of the all-time high levels, like 8.5, so if it at least signals that now under the control of Fed, with indeed the lack of the other conditions, maybe a recession might be avoided, or at least a severe recession might be avoided. So that is maybe the hope there. And yesterday's announcements, remarks by Powell stated very clearly that one more time, I mean, if inflation is out there, we will do our best by all means. And maybe another surprise, he is kind of admitted the mistake. Maybe we were late, he said. Maybe we were late for intervening the situation, but now we are intervening the situation with all means. So signaling that the contractionary policies will continue. And I think the markets are already priced the news that there will be 50 base points increases by June and July. So based on those, we will see altogether about the condition of the world economies. Of course, if this continues with a recession, then it will not be good news for crypto assets by all means, because it will distort the risk appetite. We are already in the lowest terms there. You have mentioned the fear and greed index. It is in very low levels. We have one person, Corto Maltese, asking in Turkish, but let me translate it. There's a rainbow chart by, to my knowledge, blockchaincenter.net. So they have created another metric based on some other tools. So I will have a kind of brief reaction response to that question. The question is, should we take it serious? And no single metric will be perfect. So it will be our responsibilities to make advantage of all the tools available for us: on-chain metrics, sentimental analysis, technical analysis, the other metrics, the original and aggregated metrics. They are all out there for us to make wiser decisions. So of course we need to use all of them, but not to trust them fully. Well, last week we had already discussed about the Terra blockchain. Now we have another incident there. This time, another stable coin, lost the peg. My question for you, Burak, would be the Yellen's also explanation. So she indeed explicitly referred to Terra blockchain, saying that, oh, we are very aware that there are stable coins out there growing very fast. Now they are not carrying any risks because they are still small projects, but we are monitoring them. We have prepared a kind of report on stable coins. I haven't seen that report though, so if you had a check, or if maybe in our later episodes we can also discuss about them. But the message was clear. She said that we are watching, we are monitoring what's going on there. For now, they are not carrying risks for the financial stability of the USD dollar, but we need to regulate them for sure. So that was the main message. I don't know if you have any other comments, because we have a history of regulatory preparations for stable coins, starting with Stable Act. So the crypto, I think they have kind of accepted the fact that the whole crypto ecosystem cannot be regulated, but now they are seemingly targeting stable coins, which might be actually a better strategy. What do you think?
So it was easy. Terra made it very difficult. It was easy because their full intention and 100% intention first, when they talk about stable coins. For example, the first one came out in July, last year, right? July 19th, presidential advisory group wrote a report about specifically for stable coins. So if you look at all the reports, the comments, everything, they only focused on Tether, USDC, Paxos, the ones that are backed with fiat and assets, because those are easy to want, because there's a company there who's backing it, so they want to give them to a bank status, etc. So Terra actually made it very difficult right now, because now they have to rethink and maybe expand the framework to cover algorithmic stable coins too, which was supposed to be in the second step. So first step was the stable coin regulations, easy. There are a couple of bills in the Congress and in the Senate now, they're talking about it, but like that was easy actually. I mean, the easiest way to give force them to like get audited. The risk, what they provide right now, the attestations they are not audits. Audits are different. I don't want to go into too much detail about it, but they're different. But that was so easy to do, but now you cannot audit a DeFi platform or algorithmic stable coins, because they work so much very differently than asset-backed or fiat-backed stable coins. So the second step was going to be DeFi, maybe KYC, all of that. and then would be the other altcoins, the Howey test, and then like giving them like, you know, the legal status as a security. That was the whole picture, but now this USD actually blurred the line between the first step and the second step. So I don't really believe that Janet Yellen was really afraid of USD or stablecoin, algorithmic stablecoin in terms of a regulatory framework 2 weeks ago, because we haven't seen it anywhere. There's no report, nothing like mentioned anything about algorithmic stablecoins in the government reports. They all talk about every single ETF they rejected. 60, 70 pages. Almost every page shows some concerns about Tether. Is it bagged? It's not a bag. We cannot see it. There's no transparency. There's a risk there, and that is associated with the spot ETF, etc., etc. We haven't seen it yet, so this made it very difficult. Maybe it's better. If it's difficult, then they have to think about it more, study it more. It will require more time, and the more time is better because that will give an opportunity for deliberation. And the industry, they always call them to the Congress and in the commissions and then talk to them and have a conversation. This will, like, long term, will bring an opportunity to increase the dialogue between the lawmakers and the industry, and that will always benefit both sides, I believe.
And I observe actually a common mistake. We have witnessed altogether that Bitcoin was kind of a brand name for all cryptocurrencies. So once those regulatory bodies were referring to cryptocurrencies, they were just thinking that they are at the same shape. They are like, every one of them is just like Bitcoin. So that's why we have discussed a lot about the clarification of the differences between those projects. Of course, Ethereum cannot be even compared to Bitcoin by design, by structure. We see a similar attitude towards stable coins now. So stable coins are with lots of different projects. We have just recently discussed that in top 20 projects, now we have 4 stable coins, and actually 4 of them are different than each other. You cannot even compare, I think, DAI, the project by MakerDAO, with USDT Tether. I mean, for Tether, for BUSD, USDC. So they are all, as you have mentioned, backed by bank accounts. They are supposed to have USD dollars backing those stable coins, which is essential for sustainability of those projects. Of course, everyone says that for USDT, it is not like USDC or BUSDC. There is already a court going on for USDT. It looks like once we check the reserves, just 4% of USDT is backed with cash, which is of course a risk. But still, I mean, the story is very different for DAI, for example. DAI is by design an over-collateralized project, which makes it much more secure. On top of that, there is no company behind DAI. It is backed by a DAO. So by all means, decentralization helps to the security, reliability, and the sustainability of the project. So it will be unfair just checking the unpacked and unsuccessful stablecoin projects and to criticize they are not in the same category. They are not even in the same dimension. But of course, it takes more time, more effort to check the details of those projects. So long story short, maybe for our audience or for anyone interested, just check these 2 criteria for stablecoins in particular. Check the decentralization level. If there's a company behind it, it is by definition centralized. It doesn't mean that it is more risky, but it means that you should check all the records of the company, all the collateralization mechanisms, reserves, so they are transparently sharing them with everyone, or they should. On the other hand, for the other way around, so you need to check the mechanism behind the peg. So how that project sustains the peg with an over collateralization mechanism, under collateralization mechanism, in an algorithmic way, like USD. So once you are aware of them, once you compare them, then actually anyone can decide more comfortably, I believe, on which stable coins are reliable and which are not. So hopefully for the last 2 weeks, we are discussing about a bit drama in the cryptocurrency ecosystem. Now we are talking about recession risks. So hopefully in summer and beginning from our next program, Burak, things will be much more optimistic. Let's hope for that. And then hopefully we will discuss about for maybe some other promising projects and some other promising news. Anything to add? Any final comments, Burak?
No, everything is good, and yeah, I think we covered all the things we would like to talk today. Next week, maybe we can talk about a little bit on chain too, because I would like to share some insights about what happened with the Luna's reserves and everything. There are some interesting insights there. Next week, I believe we'll have more time to talk about it too. I think it'll be good for everyone to know about also the technical sides on the on-chain sides behind the scenes.
I completely agree. There is a just final question again in Turkish, so let me just translate it, stating that actually in inflationary environment, the demand for crypto should be increased was one of our previous statements, as Korto says. Well, we had actually discussed about it. I mean, Burak made quite a nice analogy with building with on fire. So very shortly, so now things are indeed on fire. So the Bitcoin cannot separate itself from the other financial instruments because we have so much uncertainty. The dust is out there, so no one sees the future comfortably. We have lots of risks about Russia-Ukraine crisis, about the attitude of and the policies of Fed. Now it is a bit much more clarified, but I think it will take time. First of all, we need to get rid of this a bit too much dramatic environment. And as long as we have continuous negative real returns, then of course the cryptocurrencies will provide an alternative asset, a kind of hedge mechanism. But it will take time for the investors to observe it and to act like it, because as Burak's excellent example, the building is on fire for now. So let's hope it will not continue a lot more like this.
Also, one more thing I like to add, like that's a good like narrative, and it's actually a very legitimate narrative. The Bitcoin, especially because of the supply is capped, so the inflation would actually work for Bitcoin. If there's more money, the value of Bitcoin or anything that you cannot produce arbitrarily will go up. But we are in it now. So inflation narrative started 2 years ago when government started to print money. And that inflation narrative, when it started, Bitcoin was probably like 3,000, 4,000, 5,000, I don't remember. But now inflation back then was like 1%, 2%, maybe 3%. It wasn't like out of control. When you want to hedge something against inflation, you do it before it happens. So when it happens, then you actually protect yourself. So now we are in it. Obviously, for the long term, if you believe that the central banks will print more money in the future, that means anything that you cannot print will increase its value against that something you can print, which is fiat money.
Many thanks, Burak, for all of the contributions, for all of your nice interpretations, and also thanks to our audience for the questions and comments. So looking forward to seeing you next week's episode, and cheers. Bye.
Bye.